Well, as bankers fight their rearguard against regulation or new regulation here in Davos, the chairman of the world's oldest insurance market says we don't need new rules, but just better ones. Well, Peter Levene joins us now. Lord Levene, thank you so much for being here in the studio. First of all, how do you rate this year's Davos? Because it does seem we have a lot of bankers split in the middle, regulation, not regulation. The economy is doing better, it's not doing better. Where do you stand?
I think it's a pretty good summary. Happily, I'm not here as a banker, and in insurance in our world, we're okay. We'd certainly like to see some new regulation in insurance in the United States. And I was just with Chairman Frank, and he knows our views. In the United States, in the insurance world, we have 55 regulators. And 55 regulators is not workable. And we've been talking to them about this for a long time. But I think the general mood here, as you say, is people are uncertain. You know, have we got out of this terrible recession? Phew, okay, we're okay. And then you look over the top and say, what's over the other side? Well, we're not sure. In the insurance world, we had a good year last year. This year looks like it may be quite tough because rates have been kept down because we haven't had a lot of claims. Investment income is low. But we've been fortunate, and I think, talking not just about the whole insurance world, but the Lloyds market in particular, of course, Lloyds had its near-death experience about 20 years ago, and I have to say I think people have learnt their lesson from that.
You have actually made an awful lot of money recently. I think it's something like £11 billion in the last 3.5 years. Have you been storing up risk for the future? Or, I mean, after, as you talk about your near-death experience, you learned your lessons?
Well, look, when the World Trade Center disaster happened, it cost Lloyds $5 billion. We wrote out the check. When Katrina happened, it cost us net $8 billion, and we wrote out the check. Now, nobody likes paying out checks for insurance any more than they do for anything else. But if you're going to buy insurance, you want to know that if something happens, you're going to get paid. As far as we're concerned, in 320-odd years, we've never failed to pay a valid claim. So you want us to have that money. Everybody does. Because we don't have it sitting there when something happens, which is why we're there. Yeah. If it's not there, we won't be able to pay. So we keep it there. We have it available. And, you know, if people want to pay less for their insurance, it's a different story.